Hello and welcome to Trading with Technical Indicators. Happy Monday to you. Hopefully you had a great weekend. We're right back in it, and hopefully your team won this weekend. I enjoyed my weekend. Nebraska won. So we'd like to welcome Silas, Frank, Nora, Gary, Art, Truth Will Always Prevail, and many others. Welcome to all. We also have Ben Watson in the chat, so a fellow instructor. So it's great to have him here. Let's go ahead and hop right in. Now, today's topic, a lot of you, when we had this last feedback forum, and by the way, we don't always do feedback forums every session, but one of the comments that was mentioned a couple times was talking about bounce setups near moving averages. So today I want to talk about three variations of that, and then also kind of the progression of a bounce setup. So let's talk about that here today. And by the way, this could be applicable for stocks, options, different products as well, okay? So, which is kind of nice. So remember, when we talk about examples here today, it's provided for informational purposes only. Also remember, when we talk about options, if we do, options carry a high level of risk, not suitable for all investors. Also, when we talk about examples, we will be using the paper money software application known as, for educational purposes. We also call that the desktop version, okay? And when we talk about investing, all investing involves risk, including loss of principal. Now, today, as I mentioned before, we want to talk about really setups. And when we talk about setups, we want to talk about bounce setups, okay? So I want to kind of write something down here. Let's kind of start with the question, okay? How many bounce setups in your life have you missed? Have you ever looked back at the chart and said, my gosh, if I would have seen this, I would have literally gotten in right here, okay? I think we're all guilty of that, okay? So first thing what I want to kind of do is explain kind of the bounce setup, kind of the 4 points here. Number one is we need to identify, okay? We need to identify a general area, okay? When we say a general area, for our purpose here today, we're going to really kind of be talking about which moving average, okay? Which moving average are you trying to target for a bounce setup, okay? So that's number one, okay? Now, in our class here today, we'll show 3 variations of that. The reason why I'm doing that is all of us trade different time frames, okay? By the way, it's also going to give us some help as we talk about the scan, okay, and getting comfortable with how to edit the scan, okay? Number 2, the second progression of this setup, number 1, okay, identify a general area. And the question there was, which moving average are you trying to highlight? And this is very important. You have to identify that, okay? In our examples here today, we're going to be focusing on a 10-period moving average, the exponential, and the whole. We will also talk about a 20-period or 30-period simple moving average. Those are the ones that we're going to use. If you use different ones, that's fine. But you just have to identify for you, which do you like? What level, okay? Which moving average? The second thing we want to focus on is trade above, okay? And we could be looking at, when we say trade above the high of the last maybe 1, 2, or 3 days, okay? So these first 2 points are very important because we're looking for the price to have dropped near a moving average. Number 1, general area. Number 2, looking for the price to trade above the last 1, 2, or 3 days high, okay? Now, we're also going to play on that as well because some of you might say, well, James, if it's only gone up for 1 day, that seems like a little early. Maybe you want more confirmation. We'll talk about that, okay? Now, if we were looking to see more price confirmation that it is bouncing, that it could be bouncing, acronyms that we talk about is CA hold. We would also be looking, let's say, for the moving average columns, okay? The moving average columns, green, I'm going to show that, okay? And also there's probably a moving average crossover. Now notice this third point does not come first or second, okay? We tend to really get this first, Then we start to trade above and you get more confirmation. So if you skip number 1 and 2, well, you might be a little later than you want. Now, last is if we started to really show, hey, price is confirming more. Price confirming, okay, the bounce more, you're probably getting that flag script showing a setup, okay? So if someone said, I'm just going to use a flag script, you're kind of missing the first 2 points, okay? Now, our goal here, what we're going to do is we're going to use the scan tab, and we're going to use some filters to try to really look for these 4 points, okay? Now, what I'm going to do is let's kind of pull this up, and let me bring up, I'm going to go right to scan, okay? So first off, now, by the way, I'm answering this based on multiple questions that I received in the feedback. And so I want to kind of address those questions, and then we're going to kind of do our trade examples off kind of the solution or a solution to the questions. So first off, when we go to the scan tab, right in the Thinkorswim platform, you're going to notice I'm going to share this script with you, okay? Let me say share scan query. Now, it's not a watch list yet, okay? And I'm going to send this. Now, by the way, if you're watching this live, there is the scan script right there in that chat. Now, what we can do with that is if I go to, let's say, setup, okay, right at the very top. So whenever someone shares a script with you, the way you input it is the same. We're going to go to setup, open shared item, same as usual, okay? When I do that, I'm going to copy and paste back in what you see in the chat. And I will also post it in the description of this video. Now, when I say preview this, it's saying someone's sharing a scan with me. Now, if I did this right now, and I clicked on import, it's going to come up with the same criteria. And I'm just kind of verifying that if you did that, are we seeing the same criteria? Simple moving average, yeah. So if you did it right now, it should pull up pretty much the same. That's not that we haven't seen the list yet, okay? Now, what I'm going to do in this case is I want to explain what this is showing, okay? You could have like phenomenal tools, Ben, but the biggest actually thing is you got to know how to use the tools. And what are the tools actually telling you, okay? So first off, it's looking for the simple moving average, okay? You kind of slide that over so I can work with that, okay? We're looking for the SMA, the 100 period greater than the 200. Why do we care? Well, this is trying to really address long-term trend, okay? Now, we don't talk about 100, 200-day moving averages, but we're trying to find something that has a longer-term trend. Notice the 50-period moving average, SMA, greater than the 100-day moving average. What's the purpose of this? The intermediate trend, okay? So first criteria, long-term trend. Want to see some long-term, multiple months, weeks to months. This one. Now, where we start to really get into what we want to get to, but this is now like kind of getting to the right edge now, it now asks us like, which moving average do you want to use, okay? Now, I'm going to go over here to the right-hand side, and we're going to click on this little pencil right here. Follow that blue marker right there, click on the pencil. Now, if I click on the pencil, it just opens up a little box, okay? Now, it's going to ask us, we're looking for the price in terms of the close, what's the length we want, which moving average do we want, and so on. Now, here's the deal. What we're going to do to start with is we're just going to even take this out. And let's say we typed in simple, okay? Now, I don't even have to get to the very end. You don't have to be a script guru, because I'm not, okay? But if I said, hey, I'm just going to start typing in where there was a moving average, S simple moving average. Now, you don't have to type it in. As you start typing in, you'll see things that come up that we can just click on. And it's going to say simple moving average. Now, for many people that look at like a simple moving average, they might say, James, I like to look at a 20-period moving average, or I like to look at a 21 or a 30, whatever. I don't care what you like. I don't care. You get to pick what you want. It's all about you right now, okay? So what I'm then going to do for yourself is we're going to take, for example, the 20 period. If you use that, we're going to type in, let's say, the simple moving average. And now once we do that, you're now going to see that we can now just bring up that script right on your side, okay? Now, I'm going to go back to something, and I think I had like a different view. Let me reload that for my side. Let's see. Bring that up. Load, personal. Let's go there. Okay, now, let me bring that back up to verify. Yeah, the way I ran that or had that, we can even just type in the word simple for simple moving average, okay? And we're going to look for something here, 20, okay? There it is. So 20-day moving average, 20. The average type, I just put simple, okay? Not too bad. Now, this down here is really showing us how close we are to that moving average. So remember we kind of talked about the 4 points, right? We're trying to get in that general vicinity of the 20-period moving average within about 1.5%. Now, these scripts are not perfect. When I ran this list, I found 2 or 3 stocks per list that really weren't as close to the moving averages as I would have liked, but those stocks did have a big move intraday, like in the last hour or two. But most of them showed what they should have showed, okay? Now, what I'm going to do is I'm going to click on OK. The other thing we want to kind of point out here is the high greater than from 1 day ago. Why does this matter? Okay, what are you trying to really do? Well, you're trying to really find something where it might be going from where it's pulled back and then starting to go up. Now, the good thing about 1 day is it's early. The bad thing about 1 day, it's early. There's no confirmation. So if you said, I don't like 1 day, then you don't have to have 1 day. You could just go to the pencil again, click on the pencil, and you could just say, look, I want to edit, not 1 day. I want to go to edit, and I want to just now bring up not 1 day. I want 2 day. I want 3 day. And what that's really going to be doing is, since you might be saying, I want to see more confirmation of that bounce. That's fine. It's all up to you. What do you want? For our first example, we're going to use 1. We said it's early, okay? And you might kind of take the middle of that and say, I'm going to take 2. Fine. Have it your way, okay? But for our example, we'll take 1. We're going to click on OK. Now, here's the deal. So once I do this, we need to understand, scan in, and you could select what do we want to scan in, the S&P 500, okay? So we're going to use that to begin with. There it is. And we're going to say scan. Now, when I scan this, what you're now going to notice is we could take the stocks that come back, and what you're now going to notice is the stocks that come back, we can then save them to a watch list, okay? Now, I am on a real platform, non-funded, okay? And when we do that, what we can do is when we get the list back, we could say save it as a watch list, okay? Now, the interesting thing about this is when you save it to a watch list, okay, what's nice about this is when you save it to a watch list, that watch list will then look like this, okay? If you've done this before. And the column headings are the ones that we talk about on any class that I teach, okay? Now, you're going to notice that when you save it, and we go to that drop down right there, go to personal, one of the things that I put in there that I just did is that 20-day SMA bounce, okay? So if I go to that 20-day moving average bounce, the scan, the criteria is stationary, okay? The list that we actually get is dynamic based upon what's happening now, okay? So the question was, could you show how to put that script back in again? Yes. So I'm going to go to Setup, Open Shared Item, copy and paste back in. There it is, okay? Setup, okay? Open Shared Item, copy and paste that script back in. I'll put it back in the chat, okay? So you can see it again. There it is. And so say Preview, and then import that. So once you do that, okay, once I do that, you're now going to get this little script. Show it twice now, pull it up. Now, the reason why we spent some time talking about, okay, the information here, how do we change this? Okay, so this one that I did is this one that I sent you. The moving average that it has is a hole, okay? How do we change that? Let's show one more time. We go back. Let's take the hole out, and I'm just going to type in simple, okay? So when I start typing that in, I'm going to click right there, and it fills it in. I don't want, let's say, 10 for that. You might want 20 or 30. We'll take it. And when we do that, click on OK. That's all we changed, okay? Now, we said scan the S&P 500, scan, and now what you see is the list comes back. Now, when we get the list to come back, we can now just take this list, and what I'm going to do is I'm going to click on the 3 lines where it says showing 38 of 38, save as a watch list, if you don't mind. I'm just going to put an example, okay, scan. Now, if we said, what is the scan trying to do? We would label this as a 20 SMA bounce. How do we know that? It's a simple moving average. How do we know what the duration is? 20, okay? Save. Now, let's kind of go back to that list for just a sec. Where do we see the list? Well, the list is under Market Watch. When we go underneath Market Watch, we go to quotes, we hit the drop down. That drop down right there, we can go to our personal list. Remember that example scan that we just did? 20-day SMA bounce? There it is, okay? All right, so what I want to kind of do now is kind of talk about something that we mentioned before. Let's kind of bring up some of these stocks and then what they look like, okay? So what I want to do is I want to go back to some of these stocks and I want to show you visually what we're seeing. Now I'm going to detach this list and slide it over here to the right, if you wouldn't mind, okay? Put it over here. There you go. Now, I want to kind of show you some of these stocks, and I want to bring up just a chart that has just a 10-day exponential moving average. Nothing new. You've seen that before. There it is, blue. And the 20-period moving average is right there. Okay, fine. And we could see that right at the very top, a little color coding. Moving average exponential 10, simple moving average in red, right? A little color code, okay? Now, one of the stocks that came up in this list is, you're going to see that we have this one at Cincinnati Financial Corp, okay? Now, the one thing that this search will do is it will find stocks intraday, like this one, that has come down within a 1.5% differential of the moving average, the 20 period. And if we start trading above yesterday's or the previous trading day's high, there's Friday's high. And if we do that, it's going to be showing up on the list. Okay? Now, let me show you some other stocks. And that list is just up to the right of me. So you're going to see the same list. Now, one of the stocks that came up on that list, and we'll pull this up, AbbVie, right at the top. Now, if we look at AbbVie, what you're going to now notice is, look how tight it is to the moving average. That's the point, okay? What were those points we said again? Remember the first question I asked, which is, how many bounce setups have you missed in your life? And we would all say, man, too many, okay? Well, we're trying to identify a general area moving average in which you're trying to target for a bounce setup. Well, that's the first. Can we find some stocks that are in the range of the moving average that we have selected? We're using a 20 period right now, okay? Number two, are we trading above the last high of the last 1 day? That was the criteria. We showed if you want more confirmation, you could use 2 to 3 days. We're using 1, okay? Now, if we start to get more confirmation of the price bouncing up, that would be hold. The moving average columns would be that green color, showing if you use those moving averages or the moving average cross in general, okay? Now, if we take a look at AbbVie, what you're now going to notice is this is the earliest sign of the bounce because it's not hold yet, okay? And I'm showing you this one on purpose. Of these 1 day down, 2-day down, 3-day down. Which day is the lowest? Well, it's day 2. Okay, that's the lowest day of the pullback of the red candles. Now, if you notice this, what is the high of that day? It's right there. So if I kind of put a little dash line right there, this is not hold yet. Okay? Now, so why am I pointing this out? Why is this script of interest? Well, because if you say, I like the hold setups or bounce setups, but I feel like I'd like to at least have some earlier warning signs, this scan would be an appropriate way to try to find those. Now, when we look at some others, like we saw with Cincinnati Financial, is there some examples there where the bounce has gone up to the point where it has turned into hold in a day? Ding, 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 ding. Yes. Look at the most recent red candles. 1, 2, 3. Which one is the lowest? Friday's candle, candle 3 in our case. And if we went up as much as we did, that is why there's a green dot on that chart as well. So number one, it shows up in the search stocks, but it would also show, for example, hold, because the up move is not just about previous day's high. The previous day's high was the lowest day. So when we go back one trading day, Friday, was that day the low of the most recent red candles? In this case, it was, and that's why it's showing hold. Okay. Now, a couple of these other stocks that we actually see in this list, a stock like DVA. Okay. Now, DVA, look at where it is, right? Right near that moving average. Why is it not showing a hold yet? It's not showing a hold because the most recent red candles, 1, 2, that's the lowest day on the 5th, and we're not trading above that high. But the investor might say, James, this might become a hold. I am now going to start to watch that so I can stop missing bounce setups. Now, we have another one like International Paper, where you actually see that it's kind of gone to, it's at these old highs. But this old high might be a new potential bounce area. And if you zoom in on this, and we've said of the most recent red candles, which one was the lowest? 1, 2, 3, 4. Sure looks like the Friday candle was the lowest, most recent red candle. Today, or where we are currently, it's not above Friday's high, but it's showing up on the list. Now, kind of go back to this. We're trying to get a search/scan that can help us see those potential holds sooner. Okay? So these two things feed into what might become hold. Okay? There you go. Just blacked out, but we're back. Now, if we get a hold, okay, and it starts to bounce even more, that could then turn into, for example, let's say like a flag setup even, okay? I don't want us doing that, but I'll stop drawing. So the biggest actually thing is just I want you to kind of keep that in mind here, okay? So now let's bring up some other examples. Wonder if you said, hey, James, I want to, for example, go back to that search just real quick. And I don't want to look for things that may be a 20-period moving average, a simple. I want to, for example, go back to, let's say, a 10-day hold, okay? So how would we change this? Now, this is going to be a part of your homework assignment, okay? Because I imagine for you, like different periods for different reasons and different types of moving averages. So we're going to go back to this right here, click on the pencil, okay? We're going to take out the 20 and we're going to move it to 10, okay? Move it to 10. Instead of the average type being simple, we're going to put, now if we use whole, we're just going to type in H-U-L-L, okay, for whole. And if I do that, we're just going to take the whole moving average. And I think it's better even when you capitalize it. There you go. There you go. Okay, so all I did, how hard is that? Not too hard, right? Whole, okay? 10-day. Now, we're going to go back. We're going to add a little flavor to this. Wonder if you said, James, how do I know like if we're trading above the high The high is greater than the high from 1 bar ago. Wonder if I want more confirmation. Let's go back to the pencil, okay? We're gonna go to edit, not too bad. And instead of saying 1 day, we're just gonna say, give me 2, okay? I want 2 days now. I want us to be trading above the high from 2 days ago. So we need to be above Thursday's or Friday's high. Save, click on OK. Now, how do we run the scan? So what I'm going to do is I'm going to scan. We're going to use the same S&P 500 stocks, and there we go. Now, wonder if I wanted to save this scan. So you could do 2 things here. Number 1 is you could just save the watch list. That's what we did. If you just save a watch list, and let me show you this. When you save that watch list, if I typed in Ben, okay, save, go back to Market Watch, go back to that personal list, go to personal, and I go to Ben, what do you notice here? This is not a dynamic watch list, okay? It's just saving the stocks from the scan, okay? So that's not going to be, now what you're going to notice is that list of Ben is different than the scan. Scan. Okay, so let's go back to that real quick. Let's run it again. But how do you save the scan? So that way, day over day over day, you could actually watch different stocks come across as potential examples of bounces. We're going to go over here to the right-hand side, okay? Where it says add condition group, just to the right here, we're going to say save scan query, okay? Now what I'm going to do is show that again, add condition group to the right, click on those 3 lines, save scan query. What I'm going to do now is I labeled it as, we'll just label it as Ben to show the little difference here, okay? Save it, okay? Now, I got to put Ben 2, okay? There we go. Now, let's go back to the list. Market Watch, go back, and if we bring up personal now, there is a dynamic watch list. So 3 days from now, we don't have to run the scan again. We could just call it 10-day moving average whole. Okay, we labeled it Ben, for example, so you can see that. But do not fall into that trap, because if you just save the watch list, that's not saving the scan and it's not updating the stocks. Okay, now what I want to do is let's kind of look and see if there's any questions here. Okay, any questions? But I try to address kind of some of those things that people might have. Now, that's correct. That's correct, Chris. And that's what we just talked about. Okay. Now, that's true. That's why I'm showing you both ways. Okay. So if you said, James, I just want to save this list, we showed how to save that list. Second, James, I want to save the scan and have that list updated daily, showed you how to do that as well. Okay. Now, let's kind of go back to a couple stocks. So let me go back to the scan for just a moment. Now, first homework assignment, we need to kind of check on, see how we're doing. Does everyone feel pretty confident that you could take the one foundational search, and you feel pretty confident that you could change the length of the moving average and the type of the moving average? Do you feel comfortable with that? The only one that we did not do, okay, the way we started was we had simple here, simple moving average, okay? The simple moving average, and by the way, I think it works better when you just do simple, okay? Notice you can do okay. We changed it out. We said we could do whole, just do whole only, okay? And we can click on okay. The only one we didn't do, but what I would mention is, can we have like an exponential moving average, okay? And that one, for example, I'd have to see which one that is. Exponential, and I'll pull it up in my scan in just a sec that I called it, and we'll do that right now so we can see that. So if I run that scan, okay, and I already saved it before, just want to show you what it's called. Load, okay, 10-day EMA bounce. Yeah, so on that one, you want to type in the word exponential. So if you're saying, I want to bring up an exponential moving average, there it is, okay? So those are the three that you're going to be really using the most. And that's what it's going to look like, exponential. Okay? So the words of the day, simple, whole, exponential. Okay? There you go. Now, I want to go back just real quick too. So first off, are we good on that? You feel pretty good? Now, the other thing I want to do is I want to go back to something just real quick because I want to look at that list and I want to look at 2 trade examples on those. So if I ran, for example, that 10-day whole bounce that we were just on, and I said I want up not just 1 day, but give me 2, okay? Doing it again, right? Save it. Let's run it, okay? Now, I want to look at some of these stocks in this list. Now, if I just wanted to save the watch list, how do we do it? Go down to where it says showing 34 click on the 3 lines, save as a watch list, okay? Now, I'm just going to type in A so I can bring up a watch list quick, pull it up. And now on my right-hand side, you're going to see that list. I'll pull it up there. It's going to be right there, okay? Now, let's look at some of these stocks, okay? Now, one of the stocks that's actually coming up, and we could just go from top down. One of the stocks that's actually pulling up is one called AEP. Now, we're looking at the whole moving average, okay? That's why we see this type of chart. We're not looking at a simple and exponential like we saw before, okay? Now, notice that we see that right now, that AEP, okay, which is right there. This is when I ran the scan, put in a list, AEP was right at the top. I'm not cherry picking. I'm going top down, okay? If I look at this, can we get something that matches the criteria, but also something that's showing a hold as well? The answer is yes, if the stock has gone up decently today. And so which moving average is which? Well, the 10-period moving average is the one that's closer to the current price action, okay? The 20-period moving average is lagging, and we see AEP here pushing up as well. Now, you're going to see, and I'm going to kind of just show you some different stocks of what they look like. American Water as well, okay? Now, this one kind of had a little run up in the price. 1-day pullback, 2-day pullback. Let's verify what it's actually trying to show us. Well, this was the last 1-day pullback, 2-day pullback. We're looking to see, are we trading above where we were 2 days ago? I'll just take a yes or no. Are we? We are. Why is that dot showing you there? Because it's also a hold at the same time. So if you said, I want to see something that's trading above this 2-day ago high or 3-day ago high, what does that probably mean? You're probably seeing more examples of hold on the chart. If we are using like trading above 1-day ago high, okay, that's probably 50-50 shot of a hold. Usually the only way that's going to be a hold is if it's a big bounce on that day, okay? But if you say I want it to be above the 2nd or 3rd day high, okay, or 2 days ago, 3 days ago high, you're most likely going to see probably over 50% chance the hold dot as well, showing more confirmation of the bounce, okay? Now, what I want to do is let me kind of show just one other one that's also come up in this list. We see a small company we've never, if you watched the U.S. Open over the weekend, not a recommendation, but this promoter was actually out there, okay? Would have been hard not to see it. We're going to do an example on this. Now, I want to talk about if the investor says, James, I see an entry, okay, on this chart, I'm seeing a bounce. Where does one set the initial stop, okay? So notice the red candle, right? Fine. And then notice, for example, there's our first update. Fine. And then we get a little gap, and then here we are. But where does one set the initial stop? Well, if we kind of get a 2-day bounce like we're seeing, the initial stop is going to be underneath the open of that first bounce day. And that first bounce day, for our examples, better be a green color. Now, let me repeat. We're going to set the stop underneath that open price, less 2 to 3%. We're going to right-click on the chart, go down to where it says Buy Custom, and I'm going to go with stop. So if I put my cursor right on the chart, in the top left, we can really see what the open was, right underneath where it says Chubb LTD. And if I take 286.90, which is the open from Friday, less 2%, we are going to set that stop at 281, okay, 16, okay? So all we did is, now, when I point to a candle, O for open, H for high, and so on. So as I pointed to that candle, you're going to see where I got, where we're going to set the stop. Now, let me say this just so we can talk about it at the same time, okay? If we had a stock like Cincinnati Financial that in one day did the bounce, in one day did the hold, then the stop is going to be taken underneath the open of today's candle, less 2 to 3%, okay? So that's what that is. So if we have like a 2-day bounce set up, the stop is from the first up day. That better be a green color candle, the open, okay? If that bullish bounce in one day bounced, showed a hold, it's the open of today, okay? So that's how we set those initial stops. Now, if we go back to CB, put this back on, what's the stop? We got 281.16, yes, data GTC, okay? Confirm send. Now, what you're now going to notice is that's our bounce setup on Chubb. Now, Chubb is kind of more like a high-end property casualty insurance. I'd say it's probably more higher end, okay? So we're going to send the order. Remember how this works. With the stop order, there's no guarantee that it's going to get filled right at that spot, okay? Now, I want to do one more, and then I want to go to questions, okay? One of the other stocks that we saw in that list as well is, I pulled this up and said, what other stocks are we seeing in that list? I want to also go back to, see if we can't see one on all. And what I want to do is I want to bring this back up to, I'll pick a different spot because we were just in that spot. But if I picked a stock example given like HOLX, okay? Now on HOLX, what you're going to notice is it ran up in price, right? Pullback, red candles. So when I say pullback, we're talking about red candles. 1-day pullback, 2-day pullback. Now, remember what we want to really see in this case is there's the first up day, okay? Now that first up day, it wouldn't have met the criteria, right? We want to see that stock go up even more. And if it goes up more and it's trading above that 2-day ago high, which by the way is down here, okay? You're now going to see that if we look at this 1 day ago, 2 day ago, okay? Which of those red candles is the lowest? 1 or 2? It's the second candle. Why is that green dot there? It's not only meeting the scan criteria, but it's also showing close above the high to low day. So if you get a large green candle, it's just increasing the likelihood that that's going to be there as well. Now, if you said, James, I don't have that on my chart, could you share that as well? The answer is sure, okay? Now, I want to go back to this, okay? So if we look at our second trade here, we said Hologic, where are we going to set the stop? Was Friday the bounce? No, it's kind of an update, but it didn't really bounce hard, okay? Didn't really meet the criteria, okay? The reason why Friday would have not met the criteria is we're going back 1 day, 2 day, and we're asking, was Friday trading or closing above 2 days ago? It didn't, okay? So that's why Friday wouldn't matter. Now, if we go for it to today, we draw it up again. Let's go back. Day 1 was Friday. Day 2 was Thursday. Okay, what is the scan trying to look for? That we're trading above where we were 2 days ago. Okay, what does that probably tell us? Well, if we do that, we're probably seeing more material signs of a bounce setup. Okay, now on this one, are we going to set the stop underneath today's open price, or are we going to set the stop underneath Friday's open price? Hit me with that. What are we going to do? Well, we're going to take Friday's open price. And if we did that last 2%, it's going to be 79. 47. Okay, now if I do this real quick, buy custom, and I type in 79.47, there you go. Okay, so from this class, what we did is we focused on one search that can be altered. And it can be altered based on three major criteria, such as what moving average do you want? Now remember, whole, simple, exponential is how you change the moving average type. That was the first criteria. The second criteria was changing the duration of time, okay? And the third variable we really talked about was how high do you want it to really go up above? The last 1 day or 2 day or 3 day, okay? So I want you to go kind of practice and play with that search. Find out which moving average do you want to use and the time frame and how high you want that bounce to be. That's your homework, okay? So we did 2 trade examples here today. This last one being on HOLX. I want to also kind of remind you that when we ran this script, when we went back to the scan, quick feature update was when you run the scan, you can save the scan query, which is a watch list with the criteria and then it's dynamic. But if you don't want that, and by the way, how do you know it's a dynamic like watch list? When you go to your personal, you'll see scan, scan, scan. It's going to show those. This list of Ben, this is probably a bad example. That watch list is not dynamic. Okay, no pun intended. Ben is dynamic. But you know what I meant. I was talking about the watch list that we call Ben. Okay, Ben is dynamic. Okay, now what I want us to do here today, okay, when we talked about this, the goal was to see those bounces earlier. Well, we have to identify the general area. Which moving average are you trying to see that where that bounce setup could be? Okay, are we looking for that stock to trade over the last 1, 2, or 3 days high? Those are precursors to hold, okay? And if that bounce really starts to have a bounce to it, you might even see where the flag script is starting to show as well. So what I'm trying to help you do here today is to be more timely and confident in the tools and the bounce setup, okay? And I also gave you a homework assignment as well. Now, I want to go back to this just real quick. When we talked about our examples here today, they were just that. We got Michael Fairborn coming up next. I also want to make mention, if you do not have the playlist for our class, make sure you get that. That is the playlist right there. So you can go back and view our other classes as well. Now, do you think this will help you? Now, here's the thing. If you said, James, I like to use a 50-day SMA. I like to use a 30-day SMA. I like to use different types of moving averages. It doesn't matter. This is kind of like a tool that can be adjusted or adapted to whatever time frame you like. I have 3 of them because we like to use simple moving average, we like to use whole, and we like to use exponential. There's reasons you use all of them, okay? So I want you to customize it, and I want you to practice to see how good you're getting on seeing those bounce setups. Up until today, there might have been some excuses. After today, the rug has been pulled, no excuses, okay? With that said, remember with what we discussed here today was done for example, illustrative purposes only. All investing involves risk. This has been the class on trading with technical indicators, talking about behind the scenes of the bounce setup. Take care and stay tuned for Michael Fairborn coming up next. Bye-bye.